Welcome back to Kiwoon. My name is Caleb, and today we'll be going over Affirm. Affirm is a financial technology company that has to deal with loans, and earlier today we saw Affirm make one of the biggest mistakes in recent history. For those of you that didn't know, Affirm was supposed to let out their earnings after hours today. But guess what happened? Someone accidentally scheduled the tweet for the wrong time and actually posted their earnings on Twitter. Their stock rose over 6% within just 15 minutes, but then proceeded to fall over 30% in just 30 minutes. And in this video, I'll be going over what the potential consequences may be for Affirm and speculating how it was even possible that they lost over $5 billion worth of market cap in just an hour. Now let's get right into it. So to start off, I just want to go over what actually happened. Affirm's essentially company decided that they were gonna do a Twitter or tweet of what was actually gonna go out about their earnings. And while this may not be that big, it happened at the wrong time. See, why this is so important for us investors is that earnings is supposed to happen before hours or after hours, and not during market trading, so there's no type of market manipulation. And so whether or not Affirm purposely or did not purposely decide to do this had a huge effect on how they actually traded. And Affirm went up, as I was saying before, roughly 6 to 10%. And there's a lot of screenshots that happened after this tweet, even though it was deleted just a few minutes later. See, the stock initially hiked over 10% following the message on Twitter and gave back some of those gains. But around 2:48 p.m., the company decided to post their full earnings, basically just saying that was a human error and was a call to release a small portion of Affirm's Q2 results, which was inadvertently tweeted. So again, the SEC will probably be doing a lot of looking into and probing onto this. By the way, the SEC is just the Security and Exchange Commissions. They kind of just looks into stocks and suspicious trading. And as I was saying before, shares tanked over 30% and just the full results were tweeted and released. And their stock actually halted over 6 times during this moment. And the reason why this is so important is because a trading halt is essentially just a temporary suspension of the trading or particular stock or security, and it can happen between all exchanges or just one. But in this case, Affirm just stopped. You could not buy nor sell Affirm stock within these 15 minutes that was really happening. And so while a lot of people were speculating that, hey, Affirm may go up, just after that fact that Affirm decided to release their full earnings, the numbers just did not look great, and which actually led to Affirm absolutely selling off. See, Affirm lost over 57 cents per share when their expected was only 37 cents. And while their revenue was really solid, coming in at 361 million, while their expected was 332 million, their future guidance and their future projections really decreased by a lot. And again, their numbers looked great. Active merchants increased from 8,000 to 168,000. Active consumers, 150% increase from 11.2 million and increased by 2.5 million. So again, the numbers were really, really good. But the reason why I think Affirm was even able to fall off this quickly was because of their institutional ownership. According to Fintel.com, their institutional shares is held by over 55%. So that means over 55% of Affirm stock that's out there in the public right now is held by either hedge funds or institutions that have billions and billions of dollars. So when this news about Affirm's earnings finally came out, and with this kind of messy situation with Twitter, I believe that some of the big whales or some of the big owners of Affirm decided to actually sell off what essentially Affirm was, and this is why, and this is how it led to them selling over $6 billion worth of market share. So if you can see here, Shopify, Vanguard, and this guy named Max Levchin, they hold over 50 million shares of Affirm. And so while this is really dangerous for them, is that if one of these guys just decides to sell, it completely sold off their stock. And again, if we can see here, this is their day chart, but when we look at their 15-minute chart, Affirm sold off from roughly $83 a share to $56 within just 15 minutes. And this is extremely dangerous for anyone that was in it, and I really do think there's going to be a lawsuit filed against Affirm just because of how much they were able to sell off in such a short period of time.
Pressure. It's to Jenkins, the Drew for the win! Go!
See, a lot of people probably lost a lot of money holding Affirm into earnings or just holding Affirm for a long-term suspect or play. And for them to fall off this much, I just don't think it's very reasonable. And there's gonna be a lot of problems that I guess we're gonna see in the next upcoming days or weeks of what potentially may happen to Affirm. But yeah guys, that's basically all I had. I just want to give you guys a quick update on what actually happened with Affirm and why it potentially happened. Make sure to tell someone that you love them, and peace.